Good evening, everybody. A nice Christmassy evening here in Pittsburgh. Got the fireplaces going, snow out on the ground. All right, we got a, I guess, an objective in tonight's presentation, which is on February 16th. We're going to have another full day session. We promote it as a 4-hour session, but they usually go to 6 to 7 hours. And it's going to be going through the high profit. Say high profit. The top, we call them top ranked signals and patterns, which kind of quantifies which signals and patterns work the best. And there's about 18 of them, I think. But it's not a case where number 18 is bad. It's just we've quantified them in an order so that you can see the best ones. But number 18 is not necessarily, as I say, a bad one. It's still very good. But the whole point of that type of training is not so that you learn all 18 signals and patterns, so that you can kind of concentrate on 4 or 5 that you really identify and really understand. And so that if you understand it and can identify it, now you can concentrate on those and become experts in those patterns without having to worry about knowing all the patterns. But the reason we expose everybody to all the patterns is so that they understand what some of the other patterns are doing, even if it's in conjunction with the signal and pattern they're working with. So a couple things. Yeah, I see people talk about thinkorswim. As a matter of fact, we are putting all our formulas out, and there's going to be a product on thinkorswim with our information. Let's see. If you want to sign up for it now, this is a spot where the pre-registration can get you a good discount. So you might want to take a look at that. You use the 8-day EMA. What is the faster EMA for? What is the faster EMA for? The 3 EMA, the 3T line, the little green line. Just that when you start moving away from the T line, it works more effectively. So what we're going to do tonight is we're going to kind of go through the signals and patterns that we have utilized here during this current uptrend. And the reason for that is there's a lot of stocks that have gone up during this uptrend, obviously. But if you know the ones that are going to create the strongest uptrend, those are the ones you want to go after. Obviously, making hay while the sun shines, you're trying to find the ones that are going to produce the most profitable trades during this uptrend in the market. So as we can see, this uptrend in the market didn't start off with a real candlestick reversal signal. Just a huge up day, that 1,048 point up day. Stochastics compare to thinkorswim. Oh, Vic, I don't understand what that means. Thinkorswim is a trading and execution platform. Stochastics, my stochastics are 1233. And basically, it's used only to utilize the analysis the Japanese rice traders use. That is, if you see a candlestick buy signal in an oversold condition, the probabilities are pretty strong there's a reversal. Or if you see a candlestick sell signal in the overbought condition, the probabilities are pretty strong your downtrend is going to start. So stochastics are just kind of telling you where you are in the trend. So the Dow, as you can see, has been up nicely over the last few weeks. And the NASDAQ also had the first target of heading for the 50-day moving average. Is a stochastics RSI? No, stochastics and RSI. RSI is a relative strength indicator. Stochastics is a formula based upon where prices open, where they close, what the low and what the high is. I don't even remember what the formula is, but I don't need to. All I need to do is watch to see what the visuals are. So anyways, we have an uptrend. Now the first warning is the NASDAQ getting here toward the 50. Want to see, yeah, you use slow stochastics. We're getting up here toward the resistance level. Let's take a quick look at some of the things that affect different sectors. For example, you can see what's happening in crude oil that had that 6-month downtrend, hit a low of around 42 bucks. Now we're back up to 52. And also, right here at this level in the 50, we need to see if it's going to break through. However, knowing that it broke up through here told us it was time to start looking at some of the oil stocks. Same scenario. This is the identification or the evaluation of a commodity such as gold in an uptrend. It says, yeah, I want to probably take a look at the gold stocks, and we'll get into this a little bit more when we look at Labu and Nugget. So what we're going to do tonight is we're going to go through some of our positions that we're in and the reason we were in them, the signals and patterns that told us that we want to be in them. And then I'm going to try to go through a bunch of charts that kind of illustrate those signals and patterns. So the reason for this is I've discovered in the past that there's what I see very identifiably a signal or pattern. Other people have a hard time seeing it. But there's other signals or patterns that they see very clearly. So that's why we're going through the different ones, because as I mentioned before, out of the kind of the 18 combination patterns that we have, all you need to do is pick out 4 or 5 and just become an expert in those. And I can guarantee you that if you have 4 or 5 different chart patterns to go after, you're never going to run out of trades. You're going to always have more trades than you can handle. Oh, Vic, keep asking questions. That's what the whole chat room is for. For those of you new folks in our member area, our chat room is open all day long, and that's where you ask the questions. So, and I always remind people that if you've got a question, don't be afraid to ask it, because more than likely there's a few dozen people out there that didn't ask the question that would like to know the answer to that question. Oh, Bill, can you hear me at all? Sometimes you might have to log off and then log right back on so you get a better connection. Okay. All right, so gold is still moving up. I trade futures, usually have a position on during the day. I've been long lean hogs here for a few days because of the little J-hook pattern. All right, let's get into the meat of today's session. We have made huge profits, or at least a lot of people in the chat room and I have made some huge profits on AMRN. The reason for that was, first of all, we had a bullish engulfing signal, and stochastic starting to come up. Then we had a day where it consolidated but did a doji day. How do you conquer fear of losing before taking a trade? Vicky, that's book number 3 that I've written. I can't remember the name. Candlestick Trading and Eliminating Emotions. So, not to take up too much time, which I will, today I had to go get a filling replaced. And as I was done, the dentist and I sat there, and he said, "What are you doing?" I told him I'm still doing the candlesticks. And he goes, "Oh, yeah." And so he said, "Well, how do you get through all these days where you got these big whipsaws uh, and I told him that there's different signals and patterns and confirming indicators. And he said, "Well, how did you get started in all this?" So I kind of told him the history of about 40 some odd years ago. Somebody laid candlesticks on my desk, and I didn't pay attention to them because I figured anything as sophisticated sounding as candlesticks wasn't worth the time and effort. But they kept badgering me to the point where I finally picked them up and started looking through the information, which back then was very antiquated. And I started looking at it and said, "This makes sense." And the more I looked at it, the more sense it made. Now, I had been a stockbroker for 8 years. That was back when the Dow went from 750 to 1,000, back to 750, and then it would go back up to 1,000. And it did that for about 8 years, and I got tired of all that fun and went and started buying houses in Atlanta, Georgia, renovating them and reselling them. And that's when somebody threw candlesticks on my desk. So I was the worst investor in the world, and I was even a stockbroker. I just loved investing, but I couldn't hit my butt with either hand. So when I started looking at the candlesticks, I could see visually where I was usually the seller, the panic seller at the bottom, and the exuberant buyer at the top. So I realized that if I was always selling right at the bottom, and I was doing exactly wrong because a lot of times my my frustrating question was, how come when I sell, it immediately turns around and goes up? Well, I learned that's what most humans do. And if that's the case, all I have to do is turn around and say, all right, I need to be looking for the buy signals down here. What about the engulfing pattern about 20 days ago? I don't know. You're looking at something like this. It didn't confirm the next day. Oh, that's all part of how you enhance your returns by knowing what should happen, what your entry level should be. So, anyways, Vicky, I think I'm still answering your question. I finally realized that if I was always selling at the wrong time, I need to start looking at buying. Now that it sounds a lot easier than it looks, or it looks a lot easier than it sounds, one way or the other. Because what's happening if everything is terrible, bad, it is hard as all get out to step in and start buying down here. It just goes against our emotional makeup. Um, but I learned to ask the logical question: if everybody's selling, who's starting to buy down here? And it's usually the smart money. Oh, Shalandra. This service is called CQG. It's kind of the grandfather of charting services. You get just as good charts on a lot of your trading software programs or MetaStock. They use the feed from CQG, but I pay like $1,400 a month for this just because of the clarity. Um, yes, go back to Vicky. In our members area, we do nights where we show how to do our entry and exit strategy and where to set our stop losses. Everything that I do was for my own benefit when I started, because being the worst investor in the world, what's the one major thing that kills everybody in their investing? Their own emotions. So I structured everything or set up everything where I could keep the emotions out of my trading. But that we can do on, usually we have Wednesday nights or Tuesday nights. We're not doing the Monday or Thursday night sessions, where we can do we do special sessions on entry exits, stop losses, when to take profits, um, scanning for the best trades, everything that's kind of oriented toward candlesticks. So look at the common sense of when to start buying this one. Kind of hit a bottom here. Notice all the doji type days or indecisive days. But when did it start moving? When you had that bullish engulfing signal. Then it did a doji type day. And because we know the simple rule of a doji, that the price is usually going to move in the direction of how they open after a doji, we know if it opens positive, we can be buying immediately, because we know that the candle magnitude of this day is usually going to be the same as this day right here. So if we're buying calls right here, had good profits in them, and then what do we know about a doji sandwich? That the results are going to continue with the anticipation that it was probably going to come up to the 50-day moving average, maybe over the next 2, 3, 4 trading days. That was our target. But there's one caveat that I always put in, that when we're buying, we always get huge moves like this. Definitely not. But we put ourselves in positions where the probabilities of being in big, huge moves like this are that much greater. Turning services, okay. What makes a doji sandwich? A big up day and then a doji. What's doji represent? Kind of indecision. What's our doji rule? It's going to move in the direction how they open after a doji, which means this day usually is the same magnitude as this day, with the doji kind of sandwiched in between. So just knowing that trading setup allows you to get in immediately on a positive open. So obviously, if you're buying the stock and or the calls, you're getting in at a good price, and you've got very simple expectations that this is going to be the magnitude of the day. Or if you buy here and it turns around and closes here, what's that tell you about your doji sandwich setup? It didn't work. You're right back out with a small loss, and you move on to something else. So everything that we do has expectation results. Now, again, we were buying this right here, and we were holding on to it because we know that a doji sandwich usually illustrates there's going to be more upside. This just happened to be a happy day. We've got other type of patterns. This is what we call our classic pattern. There's your fry pan bottom, which is one of your major candlestick bullish breakout setups. Oh, okay. Yes. Remember, when you're buying a signal, you're usually buying a signal when you're in the oversold condition. Obviously, a candlestick buy signal in the overbought condition doesn't mean anything. Or a candlestick sell signal in the oversold area doesn't mean anything. Just simple logic that if you see a candlestick buy signal in the oversold area, that's where you want to be buying. If it's happening during a trend, yeah, you give it much less scrutiny, because just because it does a signal formation doesn't necessarily mean it's a reversal signal. It just tells you that that was the signal for the day. This is what we call the classic pattern. A fry pan bottom, strong price move. A pullback, and then the J-hook pattern. Now, what's the prerequisite for a J-hook pattern? A strong price move, then some indecisive consolidation, and then the next wave. So you combine the two, you got a fry pan bottom, strong price move, then your J-hook pattern. Can you use stochastics when trading as a day trader? Yes. This chart right here could be a 1-minute chart, a 10-minute chart, a daily, weekly, or monthly, whatever time frame. If you always go back to the very simple definition of a candlestick signal, it is the accumulative knowledge of everybody buying or selling during a specific time frame. Where would you put a stop for ARMN? I got stopped out on 1/8 when it went 45% below the T line. Back on AM. I wouldn't have stopped out if it closed below the T line. Remember, the T line is just a confirming indicator. The signals are what we're for crying out loud. The signals are what we're looking at. So that doesn't necessarily mean that on any given day it's going to go up. It just tells us we got a buy signal. We should be in an uptrend. So now, on the other hand, if you did get stopped out, what should have been your assumption based upon a bullish engulfing and a doji sandwich? Stochastics heading up. The assumption should be that you were heading up. So if you stopped out, then you saw it turn around and come back up through the open, what's that telling you about the bulls and the bears? Telling you the bulls are still there, confirming your signal. You can buy back in. So one of the mental faux pas or stigmas that I had to get through was that if I got stopped out, I'd say, oh man. And in the old days, I'd say they're not going to trick me and get me back in and then turn it around again. What I've learned is if this is your signal and you stopped out for protection and then you saw it doing what you would expect it to be doing because of that pattern, you buy back in. So you missed out on 43 cents. You probably weren't buying this for a 43-cent profit. You're buying this for a $2, $3 upside. So I would say that probably 70% of the, maybe 50% of the time, if I've bought an uptrend, there's probably, if this was a $10 move and I only got 8, it was because I got out when it was time to get out and I got back in when it was time to get back in. Again, this is going back to kind of Vicky's question, how do you keep from being afraid to get into a position? As soon as you learn what signals and patterns work effectively, now once you see it and you know the probabilities that should be moving in the right direction, you now start asking yourself, why wouldn't I be buying this position? What would your target be on this one? I don't know at this point. I would suspect that if it opens lower tomorrow, they'll come back down and test to see if the 50 is going to act as support and then see if it starts back up again. There was a window right here. Yes. Kind of hidden, but it was there. What gives you the confidence to buy when the whole market? I wasn't. When the market was heading down, there was our sell signal on the Dow with an evening star signal and a close below the T line. What's our simple T line rule? Simple T line rule is if you see a sell signal to close below the T line, you can stay short until you see a buy signal to close back up above the T line. With the caveat that the further away you move from the T line, the higher the probability it's coming back up to test it. Good evening, Pat. How are you? Okay, we haven't even gotten through the first one. All right, we are buying. I bought some calls today on this one because the probabilities are a classic pattern, strong price move, J hook. What's the potential of this move? Wave one, wave three. The T line is the black line. The 3T line is the green line. Let's see if I can find a better chart to. I don't see the 200-day moving average. Oh, there it is, way up here. All right, real quick for some of you new folks. The blue line is the 50-day simple moving average. The red line is the 200-day simple moving average. The gray line is the 34 EMA. But the reason we have the 50 and the 200 is not because we're making decisions there. We've got the graphic capability to see what everybody else is making their decisions at those levels. Every major money manager around the world uses the 50 and the 200 to make decisions about their portfolio. We can use our candlestick graphics to tell us what the information is at those levels. Oh boy, on LCI, I think it was just the January. I usually buy fairly close in because what's the reason for buying right here? Because we're expecting the move to happen right now. Pat, you can use either the 20. Usually the 20 works better if you're in a steady uptrending market. The 34, I don't know why the 34 works, but yeah, it's been a good one. It's not a major support and resistance, but it works effectively. Okay. We bought Clovis because you had your little spinning top doji right on the 50 with a gap up. That's your best friend, and we'll get into the best friend later. We bought PDD because you can see where PDD broke out of the fry pan bottom right here at this level. And how did they do it? They kind of even gapped up a little bit and started higher. So when we have a breakout of a fry pan bottom, what's our expectation? Much more upside. So that's the same scenario on this one. Kind of a little rounding breakout of the 200. And how did it break out? With your best friend signal, a doji gap up. Now, the reason we call this your best friend is because we know that a doji represents indecision. And when they gap it up, that tells you they've made their decision very aggressively. And so if you've got a best friend signal breaking out through the 200 and breaking out through this level, that tells you this level doesn't mean anything anymore. You're in the next price move. Tiva, we bought the other day because there's the bullish engulfing, and there's your bullish doji sandwich. And remember, some of you in the chat room, I said this doji sandwich has some power in it because they gapped it up, they gapped it up again. So if you're coming out of the oversold area and they're gapping it up, what's that telling you about the enthusiasm for the bulls? They're in there with good strength. They want to be buying. Potential target is right up here at the 50. RCII missed this move, but notice what this move was. They pulled back, consolidated right to the T line, and then there's your little inverted hammer doji gap up through this level. What that tells us about our uptrend? Our uptrend was still in progress. Now, notice what it did today. This is kind of a very strengthy type analysis. Notice that today it came down, hit the T line, and bounced back up. Now, in our charts, that that may seem oh, significant because it used the T line as support. But what's really significant is notice how it uses the T line. Statistically, nobody has the T line on their charts. So the T line basically acts like a natural support and resistance level of human nature. So this is what has made me tons of money ever since I turned myself around from being the best or the worst investor in the world. When you combine the fact that the candlestick signals are the graphic depiction of what's going on in investor sentiment, and the T line is a natural support and resistance level of investor sentiment, when you combine those two, you've got an extremely powerful, high probability trade setup or trade platform that basically allows me to take my emotions out of my trading. All I have to do is stick with basic, simple rules that as long as I stay above the T line, I'm in an uptrend. That allows me to sleep very well at night. So this one we're still long. We're recommending LSCC today because look what it did over the last couple of days. Let's see if I can do it. Maybe more right in here. It broke out. Then notice what happened today. They consolidated right back down to the T line area and took it back up and did a doji. So what's the logical approach tomorrow? Even though you're in the overbought condition, if they open up positive and start trading positive, you've got kind of a doji sandwich set up, which tells you that this next wave is in progress. HMHC, the reason we were buying this right in here was look at your left-right combo. Remember, a left-right combo is one of your strongest reversal signals. A doji followed by a bullish engulfing signal. Now, this is what I call convergence analysis. Convergence analysis is merely taking all the pieces of evidence that you can see on your chart and putting them into your instant visual assessment of what's going on. A left-right combo, and the low hit right off the 50. Stochastics coming up. A doji, the next day they open up positive. This signal right here told you there was a strong bullish sentiment. That was the time to be buying. You probably have a wave one, wave two. Now you're in wave three. Twitter, there's your Morningstar signal. Now there was a ton of Morningstar signals on this date. But notice what it didn't do over the next few days. They couldn't get up above the T line. Now, for those of you that have been around, we know that the inverted hammer has got the highest probability confirmation information. That if you see an inverted hammer and they open up positive and trade positive the next day, the probabilities are probably 95% or greater that your uptrend has started. And the fact that they open it positive and close it above the T line, remember our simple rule. If you see a candlestick buy signal and a close above the T line, the probabilities are extremely strong. You're going to be in an uptrend. So these are all simple visual confirmation of rules that is based upon what human nature does time after time. Look where your Morningstar signal occurred. Morningstar signal, a dark day, a doji day, or a day of indecision. And the third day closes more than halfway up at this candle right here. And look at the strength of this candle right here. Not only did it close more than halfway up, but it kind of did a little gap up from the doji of the previous day, closed above the T line. And where was the doji? Smack dab on the 50-day moving average with stochastics down here. That's when you start buying. How long do you hold on to this one? As long as you don't see a sell signal and a close back below the T line. Morningstar signal. Now, a Morningstar signal can have one or two indecisive trading days in it. Didn't confirm. Didn't confirm. Now you have a bullish engulfing signal that closed above the T line. So what's this whole? Well, you've got a bullish reversal signal, and then you had another bullish reversal signal, all happening down here. What's that imply? The bulls are starting to take over. We also own He's, because it had a bobble breakout. Bobble breakout as it came up, failed at the 50, pulled back. They couldn't close below the T line, broke through the second time. We've been owning MAG, same scenario, but in this case, it wasn't so much a bobble breakout as it was a T-line crunch. T-line crunch is very simple. Notice how they couldn't close it below the T-line, and the T-line kept pushing it right up through the resistance level. That told you the bulls were definitely in control. And we picked up some El Paso a while back because there's your left-right combo right on the 50-day moving average. Showed some strength, failed the T-line, a doji, gap up, best friend. So you've got buy signals. Now you've got a best friend signal. That tells you your uptrend's in progress. We're going to be way behind schedule because we're just getting to the biggies right now. Now, the nice thing about Candlestick, can I get the T-line on Sink or Swim? I think so. I'm going to put this link back in. Yes, the T-line is simply the 8 exponential moving average. And you put that on your charts just as you would a 50-day simple or a 20-day simple. So they'll usually ask you what number of days or time frame, and then do you want it simple or do you want it exponential? Okay, let's go through some of these. Boeing. Boeing is still in an uptrend. It didn't stop here at the 200. Unfortunately, I'm not trading Boeing. Now, here's where you use the ETFs. Look what happened in Labu, your biotech leverage fund. Morningstar signal. Uptrend, uptrend. Now they went right through the 50. Notice where they opened it today. At the 50, came down, and then told us the 50 was going to act as support. Now, you can either be buying Labu, or you know that the biotechs are probably acting strong. You go to the biotech area and see which stocks in that sector are acting the best. Same thing you would do with Nugget. How to do that? What's that telling you about Nugget right now? Nugget looks pretty sloppy in here. That tells you, yeah, you probably want to stay away from the gold stocks. Might not be a whole bunch of strength there. Now, if you're trading the big stocks, Apple has slowly climbed back up above the T-line, but over this short-term run, it's come back up, but it wasn't your strongest chart. That's the advantage of being able to see which stocks have the biggest, strongest reversals. Big bullish engulfing signal on Netflix. Then a doji sandwich through the T-line. It's been moving very nicely. We started buying calls down here. Unfortunately, I sold half of them right here because it was lollygagging here at the 50, thinking they might start taking profits. That's why I sell half the position, so that I didn't sell all the position and it kept going. I don't feel so stupid. If I sold half the position, I know I'm in a higher risk area, but if it continues up, I know I'm still making money on the other half of my position. Now, the same made some good money also on Roku, because it had a strong Morningstar signal, then a left-right combo, popped up, and we took profits up here. Took half off on this day, took Took all of it off today with the idea that if it does a J-hook pattern, I can always buy back in. Oh, I don't know, Amy's got to email Abraham. Facebook. I don't trade Facebook very much because Facebook usually does not have a very attractive chart. Kind of drifting sideways. However, look what's happened based upon our chart. Bullish engulfing, big morning star signal with an inverted hammer. Remember our simple rule of the inverted hammer, if it opens positive, it's got a 95% probability or greater that you're heading up. But notice what the difference was now in Facebook. They got through the 50. And how did they get there? With a doji sandwich gap up. What that tells us about the 50, that everybody and their brother was watching. But the 50 was not acting as resistance anymore. There is a link to the past recordings. Sean, you'll still have to email Abraham to get that link. I don't know what it is because I never looked for it. So Amazon, same scenario, big morning star reversal. And you can see where this morning star reversal occurred, right here at this little bottom of this trend channel. So right now you just stay long on Amazon with the expectation that it's heading up here. Now, if it pulls back, likelihood could be that it's pulling back to the T line and or the 50, and then you see it do a J-hook pattern to the upside. So I'm showing some of these. There's Tesla. Tesla really hasn't been a very good trader because it's having a hard time getting through the 50. So what I'm trying to illustrate is that if you're trading the biggies, you're going to find at least one or two of the charts that have much more attractive buy signals than the others. So you trade those. Now, a week from now, it might be that Netflix you don't trade anymore, and it might be Apple that starts having a good chart pattern. All right, some of the other charts. Again, this is Ross Stores that did pull back right to the 50 and the 200. But as you can see, it opened there, came right back up. So what's that kind of tell you? Pretty much tells you they're not selling it off. They just did some consolidation. That this could be your J-hook pattern wave 3. So if this is wave 1, where do you think wave 3 is going to take you? Right back up here to test this level. Can you call call Tesla bullish engulfing? You can, but remember, you're not down here, so it's just a bullish day in an uptrend. All right, we're going to get into, I think, whoops. This one I was watching. Because this broke out. Look at your gap up, fry pan bottom. The Candlestick's coming up, huge volume. I don't know what the news was. So if I see something like this, go look to see what the news was and see if see what it's telling you. So we know the simple rule of the doji. If they open this positive tomorrow, you want to start buying immediately. It tells you the profit taking of the day is over with. If you had to pick 2 or 3 charts to trade, which would they be? Wes, we're going to get into that just right about now. The different patterns. So I'll now, just because I'll forget to answer you, I usually look at the best friend. That's our number one, or that's what I consider the top one, for two reasons. One, because the direction and the magnitude is going to be pretty good, and two, because the frequency of that pattern is quite often, quite a bit. Fry pan bottom breakouts. Also very aggressive with the kicker signal and the left-right combo. So if I was going to pick four, just using those four alone, I'd have more trades than I could ever handle. Now, when I say I have more trades than I could ever handle, if I did a scan tonight that I needed to put a new position in the portfolio because I may have sold one today, or I only need one pick, and then I've come up with Deepak. Yes, these are recorded. I forget what I said. That's just great. You remember? I can't even remember what I started this sentence with. Oh, because you have 8 or 9 very good charts and you only need one, that puts you in a position where now you can go back and kind of cultivate through and say, all right, which ones of these are the best ones, or which one's the best one? So every night I put out 2 or 3 stock picks in the member area, and that's one reason why we show people how to scan for their own picks, because the ones I pick are just what I see are good. If you're doing your own scans, you always have a constant supply of things to go after. Okay, so if your first criteria is, all right, signal, CGC, same scenario, fry pan bottom, breakout. How did it break out? There's your little best friend, doji gap up. Prone. Notice how you have knowing what should happen after your doji makes it very easy for taking profits. If this is indecision in the overbought area, what should you do? Or what if I own this? If they open this lower tomorrow, probably closing out half the position. What's the worst case scenario? It starts right back up. At least I still have half a position. If it continues down, I close out the other half just below the low of the doji today, because that tells me they're moving in the direction of how they opened after doji. Where's my next likely target? Back to the T line. We also were buying some NBEV, but I'll get to that in a second. So, did we do ACB? Yeah, ACB starting up, not your best looking chart. Now, I'm looking for fry pan bottoms because I know the price move coming out of a fry pan bottom can be extensive. Got kind of a fry pan bottom scoop type pattern. And look where it is. It broke through the 50. And you're right here in the gap area. What's a gap area mean? It means there's no resistance. If they get this one running, there's lots of running room back up to fill this gap. On Crone, where would you put your stop? Oh, then we just did that. My ultimate stop would be just below today's low. All right. A while back, the morning star signal started uptrends. Now, if you own something like this, MRTX, buying in here, nice move, nice move, nice move. But now what is your warning? Don't see a sell signal. But what's the warning that you should be watching for a sell signal? Look how far away you are from the T line. That would tell me that if I was long and this opened lower tomorrow, I'd probably start taking profits. Yep. INSM. There was your morning star signal. And then there was your confirmation coming up through the T line. So the reason I'm pointing this out is the first thing you want to learn is the bricks and mortar of is learn your 12 major signals. The morning star signal started the uptrend. Why am I? CHRS, morning star signal. Now look how excessive that morning star signal is. Closed well above the halfway point of this candle, broke out through here, closed above the T line. And remember, there's a simple rule that the Japanese rice traders convey to us, which was the bigger the signal, the more compelling there's been a change of investor sentiment. ALNY, morning star signal. How long do you hold on to this one? Look how far away you've moved from the T line. I'd have a safety stop probably right here. But if they start coming back down through the halfway point of that candle, that far away from the T line, that means they probably failed going through that level. Okay, so the best friend signal is this doji gap up. This puts you in the right position at the right time. And it works with a high degree of accuracy. There's your doji. Notice how indecisive, doji gap up. That told you they've made their decision. Electronic Arts. Your doji gap up. And these, if I'm not far away from the T line and I'm in the overbought area, I was long this position, where is a logical spot that would tell me the bears have taken control? Put my safety stop right here. Because if they have enough selling strength to come down through there, where do you think they're heading to? At least back to here or here. I'm not trying to buy at the absolute bottom, and I'm not trying to sell at the absolute top. I'm trying to get high probability fat parts of that trend over and over and over. If I can do that, the compounding effect in the account becomes huge. Now here's the doji sandwich setups. Bullish harami, left-right combo, doji, gap up. There's my doji sandwich that broke this out. Where was the first likely target? Up to the 50-day moving average. That's Hess. We bought TGI based upon, there's our kind of a little hammered doji gap up. Now we've got a doji sandwich. Where do we think our next likely target's going to be? Right up here at the 50-day moving average. BGCP. There's your doji sandwich. Now what's significant about this doji sandwich? Look where it occurred. Right smack dab on the T line. When they go through the T line, what's that tell you about your downtrend? It's over. So you've got a left-right combo that's indicating a very strong reversal, followed by a doji sandwich. And what do we expect after a doji sandwich? More upside. So when we see a doji sandwich that broke through the T line, it tells us the reversal has occurred. Nuance, kind of a left-right combo right after a doji, or a left-right combo followed by a doji sandwich. Where's our likely target? Up here. Oh, okay, yes, that's a good question to ask in a room like this. I use Think or Swim um, only because I can buy stocks, options, futures all out of one account. I don't have to shift money around. I think I can do this one. LPH. All right, so look at the logic here. We have a doji smack dab on the 50. It's got a fry pan bottom. It's starting right back up to where it started from. We're in an overbought condition. What information do we get when we have a doji sitting right here on a major moving average? The simple doji rule. If it opens positive, it's going to have a doji sandwich. What's that tell us about the 50? It's not acting as a resistance. If it opens lower, what's that telling us? They failed at the 50. If you're long, you close out the position. You don't refer to the weekly or monthly charts for support and resistance that can jeopardize your daily time frame. Not necessarily, but that doesn't stop you from doing it. Remember, the more information you can put into your analysis, the better off you are. I'm a swing trader, so my trades only last anywhere from 2 to 10 trading days. So I'm not going to put on or have the longer term charts be that relevant. If I was buying this one tomorrow, I'd be looking for a quick pop, maybe over the next 4, 5, 6 trading days coming up here to fill this. So I don't know. I don't know, and I wouldn't really be that. What do I want to say? Influenced by the weekly or the monthly. So here's an illustration. Notice how this is Morningstar signal, indecision, 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 left-right combo, inverted hammer, bullish confirmation. Additionally, where did all this occur? Right smack dab on the 50. Now, why is that relevant? Because everybody that was making their decisions about their portfolios were watching to see what it was doing at the 50. When it did the left-right combo, we knew exactly what they were doing off the 50. Or bullish engulfing left-right combo, doji sandwich up through the resistance level. Left-right combo up through the resistance level. The left-right combo is as strong or as compelling as your best friend's signal. It's just a very high probability trade setup. But if you see a left-right combo and it confirms, oh, my voice is becoming weak. That's because I'm a little and frail and old. So the left-right combo is a very strong, compelling chart indicator or trend indicator. Left-right combo, what it tells us about this indecisive trading range? Told you they've had a new decision. Left-right combo followed by a doji sandwich. How long do you stay long until you see a sell signal? But with a little bit of apprehension up here, because look how far away now you've moved from the T-line. So the left-right combo was the reason we bought this one. Unit. Left-right combo, bullish confirmation. How long do we hold on to this one? Notice we had a bearish engulfing signal, not quite in the overbought area. Where do you think it was going to pull back to? Right back to the T-line. So now if they open a positive, what type of pattern do we have? A J-hook pattern in progress. The kicker signal is your strongest signal. Notice how you were in a downtrend, downtrend, downtrend. They opened it here, closed it here. The next day, they gapped it up above the previous day's open and went the opposite direction. That told you the investor sentiment had been kicked in that direction. It usually creates a very strong price move. our recommendation on Zen was based upon a little kicker signal. Notice it came up through the resistance level, pulled back to the resistance level to see if it was going to act as support. And when they did a kicker signal off of it, what did that tell us right away? They weren't selling it off. They were still going into the next wave of this uptrend. All this information is just simple analysis or simple recognition of what human nature does time after time. Our recommendation on PTLA was very simple. There was our bobble pattern. When it opened positive, what did it tell us about the bobble? They've broken out. A bobble pattern is nothing more than a J-hook pattern where you can see where the resistance level is and where the breakout level is again. Oh, the left-right combo is a doji followed by a bullish engulfing signal. Which one was it? Unit. Notice our doji followed by a bullish engulfing signal. Blue. Kind of a bobble pattern. If this opens positive, what is our expectation? Wave 1, wave 3 up here somewhere. There's our little bobble. Ran into resistance. When it came up through the second time, look at a little kicker type signal. Makes your next move. Tesla, kind of. Yeah, you could put that into a bobble. Now that it's broken through, that's what everybody was watching to see whether it could get through. So if this started trading positive, where is it likely to move? Well, if this is wave 1, wave 3 is going to take you back up into this range. Yeah, but the swing trading is not necessarily because of getting in and getting out. It's based upon watching to see what everybody else is doing. So obviously an institutional trader that's coming in to buy Tesla, they might be coming in and buying 2.3 million shares for their portfolio. It's probably going to take them 3 or 4 days to fill that position. Yes, you can have a bearish left-right combo. I don't see one right now because I was concentrating, but if I see one, I'll point it out. But yes, a bearish left-right combo is just as powerful. As a matter of fact, if you're up in the overbought condition and you see a bearish left-right combo, I usually close out the trade immediately, even though it might not have closed back below the T-line, because the strength of the information built into a left-right combo is so strong that the probabilities are great that it's going to be heading down from there. Oh, there's your bobble breakout. And notice how they got there. This was not a signal. Whoops. Hang on for 1 second, everybody. Okay, sorry about that. Anybody want to buy a cat? Yeah. So the morning or the bobble breakout puts you in a position. I don't have another example of a kicker that I can think of right offhand. I'll try to find one as we go through. Let's see. Okay, and here's another high probability situation. Whenever you start seeing a series of dojis, it's going to create possibly a cradle pattern. HCH. See, notice all the dojis down here, and then it starts back up. Remember, if one doji means indecision, a series of dojis means greater indecision. So what are we looking for after that indecision? Which way they've taken their decision from there. Go-Go had a kicker signal. Not quite. Yeah, not quite. Not quite. A kicker signal would have been, now a true kicker signal doesn't have a tail to the downside. A true kicker signal would have opened and immediately started creating a green candle. Yep. Yeah, but that's because it's choppy. It's traded overseas. That's why you see this one so choppy. Is this a kicker signal? There's a kicker signal, yes. All right, notice, did I have that one or did you have that one? You had that one. Opened here, closed here. The next day they gapped it up and went the opposite direction. That's a kicker signal. Yeah, the other one was a modified flutter kicker. It was probably still good. What was that one? Yep. No, that wasn't it. Go-Go. Yeah, that's not a true kicker signal, except that's what we call the message. The message was, it was going in this direction and they gapped it up. You can still be buying this one because when they gapped it up, you had the message that somebody was coming in with great enthusiasm. Why do I have this one over here? This was, so much. Yeah, notice how indecision. And what told us the indecision was over? Your best friend signal. Now notice you had a left-right combo that didn't confirm. However, you have a left-right combo, didn't confirm. Now you have a kicker or a best friend signal. They've got a left-right combo and a kicker, or can't stop saying that. A best friend signal. That's telling you the bulls are taking control. Marianne, yes. But what you have just told us was fundamental information. And remember what candlestick signals are. They're the accumulative knowledge of everybody buying and selling. So I let the chart tell me what everybody thinks. Now the 17th is still a week away, isn't it? So probably in the next 3-4 trading days, you'll probably be at the 200. Then you can all the selling comes in. Has trend any significance for you? I see you are buying when the 200-day moving average is flat or even. No, we're not buying the moving averages. We're buying the signals. All the moving averages are targets that everybody else would be watching. Remember, we don't buy the T line. If this was trading down here and did a buy signal that far away from the T-line, we know the T-line would be the next target. So we're not, the number one criteria for candlestick signals is the signal itself. Everything else is just something that you add to your analysis. So if a doji gap up, then a best friend signal. But if a non-doji and a gap up, then a kicker. No, not necessarily a kicker. It might just be you could have a bullish engulfing signal followed by a gap up. Now remember, any candlestick signal followed by a gap up is significant because the reversal signal is telling you there's been a change of investor sentiment. The gap up afterwards is telling you not only have they changed direction, but they've changed direction with great enthusiasm. The doji, though, anytime you have a doji in a combination signal or pattern, it's that much more relevant. The doji just creates a little bit more power. Deepak, you're always going to have to put the name of the whatever you're talking about as we go through so fast. Isn't a bullish engulfing appearing at the top? It could. Yeah, bullish engulfing and the overbought condition is usually kind of the last gasp. So you get a little bit more, you're in the overbought area. That already puts you on alert to start watching for a sell signal. So could you have entered long on the 24th? I don't know when the 24th. You could have. I would have been more apt to wait to see because look what you were happening before this. You were in a downtrend. I want to see that it confirms. I would rather be late to the party, but dramatically improve my probabilities of being in the right place or in the right direction. OMI, look at all the dojis down here. Now they've broken out to the upside. We recommended EXPI the other day. Look at all the dojis, followed by a left-right combo. Notice what it did today. Came all the way back to the T-line and bounced back up. Now, for the people that don't have the T-line on their chart, may not have been as relevant, but we could see that it hit the T-line and came back up. So what can you do with this one tomorrow? This opens positive. You probably want to be buying because if it does a doji sandwich, where do you think the next target could be even tomorrow? Right up here to the 50-day moving average. And look at all the series of dojis here in new age beverages. Doji, doji, doji. This all occurred right here on the 34. Then they broke out. So what's your bigger pattern right now? Oh, bam. Wave 1, wave 2 of a J hook. So if this opens positive tomorrow, what's a high probability expectation? That this day right here, tomorrow, could be the same magnitude as this day right here. Save, just kind of illustrating this one. Look where all the buy signals are occurring. Right smack dab off the 50. And KL is one of the gold stocks that if it breaks out through this level, with this, what type of situation do we started buying this one a while ago and just took profits here recently. I bought calls on this one for, I think it's because when they gapped up out of here, I was telling you that fry pan bottom breakout had occurred. Okay, I think that's about all. Let's see. Oh, I know what I was supposed to tell everybody. Oh, Becky, do you have the link for if I can find it. All right, remember, this was kind of a prelude to the high profit, the top ranked signals and patterns. That's this way down here. Now, this is usually we promote it as a 4-hour. Oh, there it is. Okay. This is a 4-hour training, but kind of anticipate 6 to 7 hours because we keep adding more and more information. Now, it's not to teach you all 18 different patterns so that you learn all 18. And then kind of exposing you to all 18, but then you're going to kind of pick out some that really look, say, where you can kind of analyze them and see that there's something you could really recognize. So if you pick out 3 or 4, become an expert at those, meaning know exactly when to get in, when to get out, or when the trade's not working. When you start controlling your own trading, you take all your emotions out of your trading and you don't have to worry about what the talking heads are telling you. Now, the price of this for non-members is $397 for the session. The members, it's $227. So here's what you want to do. Just sign up as a member at $97 a month, and then do the session. You save $170. So you save about $100. And during that 30 days that you're a member, you're going to get a lot of information. The chat room is open all day long. We put out 2 or 3 stock picks every night. And the chat room is a very valuable source for learning how to trade candlesticks, how to identify the good signals and patterns, as well as having enough people out there that are providing good charts that you've got a supply of charts to look at and see why they're good trades. Okay. I guess we can take a look at some of the charts, but let's just do one per person so we can get out of here. I've got us way over time already. How much time are you available? I am usually watching the room all day long, but so you get your stock picks. I usually put text comments in the morning, and then just as things are slowing down around 11:30, 12 o'clock, I'll come in for about an hour. But if I see something during the day, if it's real relevant, I'll come in and chat. If it's something that I see that's moving, I'll put a text comment in. So I'm usually sitting here watching all day because I trade my own accounts, and so I'm sitting here anyways. All right. SNNC, you just stay long. There's your little kicker signal. And so you stay long, but right now I'd have my stop just below today's open. Baby, there's your bobble breakout. Get ready to buy this one. You can see the fry pan bottom. Now, if it opens positive, you got a bobble breakout. And radius, it has to open positive and trade positive. You can see how it's come back and use the 50 as support. Macy's. Oh, that got beaten up. If it opens lower tomorrow, you can be shorting it because you've got your kind of your gap down. The SPY is still in an uptrend, but you're getting toppy. But I would still suspect they want to get it up to the 200-day moving average. The Qs, same scenario. They're getting very close to the 50-day moving average. DXR. I'll remember also that the link up higher, that if you want to get the formulas for all the signals on toss, they're going to be putting out a product, but we can get it for people at a discount. It held the T-line. If it opens positive, there's your classic fry pan bottom, J-hook pattern setup. So you want to be buying this one on positive trading. Pump, just stay long. There's your left-right combo. Stay long with the anticipation. It's also coming up here to test the 50. CPE opened. It was still trading positive. I would have my safety stop at today's open. Because you're in the overbought area, you're right at the 50. If they come back down through this level, that's telling you they're failing here at the 50. DNR, I think we did this the other day because we've been trying to accumulate grand kit jokes. DNR, you stay long as it stays above the T-line. So our grand kid joke was, what did one DNA strand say to the other DNA strand? Do these jeans make my butt look big? We did, baby. Chesapeake. Another one that if this one opens lower tomorrow, you close it out. Told you they failed at the 50 and they're going to do a bobble pattern. We did Radius. We did Crone. Crone, if it opens lower, starts trading down, you take your profits because it failed. Radius needs to open positive and trade positive. XEL, bullish engulfing. You can buy this one. Your magnitude of return may not be huge, but positive trading would have you moving in the right direction. ESPR, kind of a Morningstar signal, inverted hammer. You can buy this one. It's still not a very enthusiastic chart, but you can be buying on positive trading on this one. Glue, just stay long. You're in the overbought area. Your safety stop should be at today's open. AVEO, another one that has to open positive. You can see where it consolidated to, right back to the T-line today. So you got a scoop type pattern, but it needs to open positive. Even if you haven't bought it yet, I'd be a buyer if it came up through the high of yesterday. SOXL, stay long. Not a real, that's the semiconductors. They're moving in the right direction. Just watch to see what happens once it gets to the 50. Ford, another one that's run out of overall enthusiasm, but if you're long, you stay long, but you can see you're starting to run out of steam. Probably at the same level you hit the 50, so just watch to see what it does once it gets to the 50. Lamb got through the 50. So I'd use today's low as a stop. It shouldn't come back down through there. INSM, that one you can be buying on positive trading. The gap up, consolidation. Now they've told you that the 200 is not going to act as resistance anymore. Should be some more upside from here. On Netflix, you just get a little bit more diligent. If it hits the 200, watch to see what it does. I exited half my position too soon when it hit the 50. I knew simply if it went through there, it was probably going to the 200. So that's why I only sold half. I'd stay with it, but be a little bit more diligent. In this webinar, do you show a search program that we can use? Is the T-bar also something we have to purchase? The T-bar. The T-line? No, the T-line is something you just put on your chart. It's just like you put the 200 on, you put the 8 exponential on. The search programs are set up for each. You can set up each one for whatever search software you use. Now, if you're looking for formulas on our website, www.candlestickforum.com, we've got all the formulas for the 12 major signals under TC 2000 formulas. Just copy and paste them. Diebold has to open positive. If it opens lower, you take your profits if you're long, and then you just put a buy stop up here. That if it sells off and then comes up through there, the bulls are still in control, you get back in. SWKS. Just stay long. Not real exciting yet, but you did have the bullish Harami, which told you the selling had stopped right here at this bottom support level. Now watch to see if the 50 is the next target. NIO, stay long. Wouldn't want to see it come back and close below the T line. Also not a real exciting one, but it's heading in the right direction. Baba. Baba, stay long on this one. However, well, I would have a safety stop down here because look at the gap up for the overbought area. That means unless they continue it, if any profit taking starts, they're bringing it back to the 50. The S&P, again, probably still heading for this level. And Raymond, you need to call me. You need to be in the options futures room. More information. Get you in there. Whoops. We have 2 trading rooms. We've got the main room, which usually has 140 people in it. And then we've got the options room that obviously has a different terminologies. We usually have 15, 18 people in that room. GBT, you had a doji in the overbought area. You've got a hanging man bearish golfing. This one has to open positive to stay long. If it opens lower, the profit taking has started. EXK. All you have to do is stay long as it stays above the T line. But notice the gap down below. I don't know what the volume is on this. I guess it's hefty. But it has to open positive to stay in it. ISNG, another one that you definitely want to see open positive and trade positive. If it trades lower, it's still coming back to actually test the T line. Is there a system to look for other candlestick patterns? Is there a system to look for other? I don't know what other. There's 12 major signals. There's about 8 patterns and Ron, you can learn all that on here, or you can buy my second book, which is High Profit Candlestick Patterns. But You can learn all that on a Thursday night, and then the members night is Monday night, and then the chat room all day long. And so essentially what you want to do is, first of all, you want to learn the 12 major signals. That's your bread and butter. That's the bricks and mortar. Then you want to concentrate on the different signals and patterns that you recognize and that you want to trade, become expert at. SSP. Notice where it's indecisive. Look how far away you are from the T-line. Stochastics in the overbought area. You're right at the same level it topped out before. I'd put a sell stop just below today's low, because if it comes back through that direction, that's telling you they're failing up here. Yes, that one is a toughie. It's not a great chart. You had your doji up here in the overbought area. When they gapped it down and started bringing it back up, it's not a good chart. It's going to take a while for it to get built back up again, and it's not going in any great major direction. If you're long, I'd see if they could pop it up a little bit, and then I'd come out and move to something better. What are the settings? 12-3-3, slow stochastics. And that's nothing set in stone. I just sat one night 30, 40 years ago and just kind of tweaked the stochastics where they kind of coincide with the bottom at the bottom and the tops at the tops. Amazon, you stay long, but at this point, if you're being up in the overbought area, use today's low as or open as your stop. If it comes back down through there, probably a good indication this downtrending channel is still in progress. They're coming back to test that moving average, the T-line. GBT, we did, didn't we? Stay long. Uh-oh. That wrong, didn't I? OPGN. Make sure your volume is hefty. You can stay long, but I wouldn't want to see it come back and close back below the 200. That would tell you that's the resistance level. Oh, did I do that wrong? Okay. Let's make sure I did this. GBT, stay long. What did I do? EPT. EPT is the Prudhoe Bay. This one's holding at the 50. If you're buying this one, it should be more oriented toward a longer term buy, because what it's got a good dividend yield. Chipotle keeps moving in the right direction. Notice there wasn't really a reversal signal here, but it just kept right on going, and it's broken through this level. So you're in the overbought area. If I was long, I'd have a sell stop just below today's open. All right, everybody. Mark your calendar. February 16th is going to be a long day again. Yeah, it's usually well worth your while. So anyways, with that, everybody have a good evening. There's still a cat for sale, so anybody, the lowest bidder gets this cat. Have a good evening. We'll see you in the chat rooms.